In the world of investing, opportunities often come in waves, and right now, the tech giant Nvidia is riding a wave that might just be a golden opportunity. Here's why. 1. Recent stock dip. Nvidia's stock price has seen a dip of around 20% from its recent all-time high. For investors, this could translate into a chance to buy a great stock at a discounted price. 2. The AI leader. When it comes to artificial intelligence, Nvidia reigns supreme. Their dominance in GPU, graphics processing unit technology, and the data center sector is unrivaled. In the AI world, they're like the godfather. 3. Stellar earnings. Nvidia has been wowing investors with its recent earnings. They've been beating estimates and showing incredible growth potential. These results are a testament to the company's strength in the tech sector. 4. Future growth. The future looks promising for Nvidia. Their continued outperformance against consensus estimates hints at a stock price that's set to climb even higher in the years to come. It's a reminder that in the ever-evolving landscape of investing, sometimes the stars align. Nvidia seems to be in that sweet spot right now. So, if you're an AI enthusiast or just an investor looking for a solid opportunity, it might be a good time to give Nvidia a closer look. Nvidia Corporation, NASDAQ, NVDA, often dubbed the godfather of AI stocks, is facing some turbulence. But in the world of investing, not all storms spell disaster. In this case, the rough waters might lead to a golden opportunity. 1. Recent stock downturn. Nvidia's stock has taken a beating, down about 20% from its recent all-time high. Now, that might sound like a red flag, but it's worth a closer look because such downturns can sometimes be just what investors are looking for. 2. The AI heavyweight. In the realm of artificial intelligence, Nvidia stands tall. They produce some of the most powerful GPUs, essentially the engines that drive AI innovation. Their role in this burgeoning field is akin to being the heavyweight champion. 3. Robust data center growth. Nvidia's data center segment is on an express train to expansion. It's gaining market share and revenue at an impressive rate. As AI technology grows, so does the demand for Nvidia's powerful hardware. 4. Stellar earnings. Nvidia's recent earnings announcements have been nothing short of impressive. They've been outperforming analyst estimates and showcasing significant potential for growth. 5. Appealing valuation. Despite its notable rise since the last market dip, Nvidia's forward PE ratio for fiscal year 2025 is still relatively low, pegged at 25 according to consensus estimates. As the stock price slides, the company's valuation could become even more appealing. 6. Buying opportunity ahead.
As the stock journeys into the $370–320 buy-in range, we might be looking at an extraordinary long-term buying opportunity. Moreover, this range seems to coincide with a crucial gap fill around the $320 mark. In essence, while it's a bit stormy now, the horizon looks promising. For investors, Nvidia's dip could be a chance to grab a great stock at a more affordable price. So keep a close eye on Nvidia, and you might just witness a golden opportunity in the making. Jensen Huang, Nvidia's founder and CEO, once stated that companies in every industry are racing to adopt generative AI. He might as well have said, Nvidia is the driving force behind this AI revolution. 1. The AI powerhouse. Nvidia is more than just a tech company. It's the architect of the AI future. Their technologies are the beating heart of the world's most advanced servers. These servers, powered by Nvidia, are what give businesses the ability to embrace generative AI. 2. Transforming industries. Nvidia isn't just advancing technology, it's transforming industries. From chatbots to virtual assistants and intelligent search engines, Nvidia's generative AI is the driving force that allows businesses across the board to reimagine their processes. 3. The economic boost. If we were to put a number on it, Nvidia-powered generative AI could inject a colossal $4.4 trillion into the global economy every year. For companies, this translates to a multitude of benefits: privacy, choice, speed, scalability, cost-effectiveness, and more. It's an economic windfall waiting to happen. 4. The full AI package. Nvidia isn't just a hardware provider, It's the whole package. It's about cutting-edge technology, a range of AI models and services, AI platform,
software, and the AI supercomputer. Nvidia doesn't just give you the tools, it hands you the keys to the future. 5. Future-proof and profitable. Nvidia is in a league of its own. With its dominance in GPU technologies and its leading role in data centers and AI, the company is poised for sustained growth. As the AI revolution gathers momentum, Nvidia's profitability is set to surge, and so is its stock price. In essence, Nvidia isn't just a player in the AI game, it's the game changer. Its influence isn't limited to a single industry, it's transcending boundaries and reshaping the world. With remarkable revenue growth and an extensive growth runway ahead, Nvidia's future looks brighter than ever in the ever-evolving realm of AI. Nvidia's recent earnings announcement wasn't just impressive, it was downright historic. In my more than 2 decades of investing, I can't recall seeing numbers like these. It all began this year when Nvidia dropped a financial bombshell with its Q1 2024 earnings report. Q1 2024. The shockwave. Nvidia's fiscal Q1 2024 results were like a thunderclap in the financial world. They didn't just beat expectations, they shattered them. To put it in numbers, Nvidia raked in around $7.2 billion in revenue against an estimated $6.5 billion. A 10% revenue beat is no small feat. But the real revelation came with Nvidia's Q2 2024 guidance. Q2 2024, guiding the future. Nvidia predicted a whopping $11 billion in revenue for fiscal Q2 2024, while the market expected $7.11 billion. This was a staggering 55% leap over the consensus estimate. It wasn't just a prediction, it was a revelation of Nvidia's colossal AI potential. 3. The actual reckoning. As fiscal Q2 2024 rolled in, Nvidia dropped another bombshell, recording $13.51 billion in revenues, way above the $11.22 billion estimate. This amounted to a staggering 90% more than initially expected, marking a 102% year-on-year increase. And when you look at data center sales, the surge was even more incredible. They hit $10.32 billion, 29% higher than estimated, with data center revenues soaring by a jaw-dropping 171% year-on-year. 4. Q3 2024. The beat goes on. Nvidia doesn't intend to slow down. They laid out revenue guidance for fiscal Q3 2024, projecting $16 billion, a remarkable 28% higher than the $12.5 billion estimate. This isn't just a company in good shape, it's a company revealing the incredible demand in the data center realm. 5. The AI kingpin. Moreover, let's not forget that Nvidia is at the pinnacle of the AI pyramid. When it comes to data center sales growth, it leaves competitors like AMD and Intel in the dust. 6. Shareholder rewards. On top of this, Nvidia has initiated a massive $25 billion buyback program and introduced dividends. As if this wasn't enough, their profitability is on an upward trajectory. Last quarter, they posted $2.70 in earnings per share against an expected $2.07 per share. In conclusion, these Nvidia results aren't just excellent, they're record-breaking. They aren't merely a testament to a company's financial prowess, they're an announcement of its unrivaled position in AI. Nvidia isn't just a player in the tech world, it's the undisputed heavyweight champion. I've often heard the murmur that Nvidia's stock is pricey. In fact, I was once guilty of using this perception as a reason to sell Nvidia just before it embarked on its remarkable journey, crossing the $300 mark. But here's the twist. Nvidia's potential for earnings growth suggests that its stock is far from expensive. Take a peek at the earnings per share, EPS, estimates for the fiscal year 2025. It's at $16.27. This places Nvidia's price-to-earnings PE ratio at a mere 25 times forward earnings, according to consensus estimates. However, the most exciting part is that Nvidia recently obliterated consensus EPS estimates. In the last quarter, it trumped these estimates by over 30%. This leaves us with a strong inkling that Nvidia might just keep outperforming the consensus forecasts in the forthcoming quarters, painting a rosy picture. What if Nvidia continues to outperform by around 20% in fiscal 2025? This means it could rake in about $20 per share instead of the $16.27 consensus. Now, with the stock hovering around $400, Nvidia's forward PE ratio drops to a pretty reasonable 20 times forward EPS. This is a steal for a company occupying the dominating, market-leading throne in Nvidia's position, especially with the monumental growth potential on the horizon. Owing to Nvidia's prominence in the realm of AI, it might just continue to shatter analyst expectations, paving the way for a significantly higher stock price in the years ahead. Into the crystal ball. Let's gaze into the crystal ball and see where Nvidia's stock could be in the coming years. Year 2025, a revenue of $90 billion and EPS of $20. Year 2026, revenue climbs to $123 billion, while EPS hits $29. Year 2027, revenue keeps growing to $154 billion and EPS is at $36. Year 2028, revenue reaches $184 billion with an EPS of $44. Year 2029, revenue soars to $217 billion and EPS stands at $53. Year 2030, the revenue juggernaut rolls on to $250 billion, while EPS escalates to $62. Year 2031, revenue touches $280 billion, and EPS crosses the $70 mark. This growth doesn't just sound impressive, it's extraordinary. And Nvidia's stock price reflects this astounding journey. Challenges along the way. But let's not wear rose-tinted glasses. Nvidia isn't immune to challenges. Despite my optimism, there are real risks to consider. While Nvidia rules the roost in GPU technology and AI, competitors like AMD, Intel, and others are hot on their heels and could snatch market share as time progresses. Nvidia's revenues may not skyrocket as we project, and its profitability might not shine as brightly as I anticipate. There's also the chance that demand for Nvidia's data center segment could slow down more than expected, potentially leading to falling revenues and EPS instead of the expected upward trajectory. A lower PE multiple might also weigh down Nvidia's stock price, making it climb at a slower pace than we're predicting. All these potential pitfalls must be assessed by investors before diving into Nvidia's stock.